Commodities, taking a look at the second week of October 17th in review. Let's start out by seeing where we closed for the week. Taking a look at the grains, December corn closed down 5 cents on the week, right at 343 and a half. Beans pretty much unchanged for the week, up about a tick, 1/4 cent in the January contract at 9.87. December wheat up not quite 6 cents at 431 and a half. Over in the livestock markets, we have December cattle down on the week, $6.72 at 120.57. December hogs were down $2.60 as well, right at 62.47 in the December contract. Looks as if oil is going to close up on the week around $1.20 at the time of this broadcast, right around that 56.80 area. The dollar looks to close about 60 points or so lower, 93.40. Is the area we're looking at here. This week was pretty much dominated as far as the grains are concerned about the monthly supply and demand report. The question going into the report, what we're going to do with the yields, and we see any adjustments made in the demand against that. And just taking a look at the balance sheet for corn, the big surprise there was we increased the corn yield about 3.5 bushels an acre, much higher than the highest guess going into the report, 175.4, a record yield as far as bushels per acre for corn. Raised our carry out up, just pushing right at the 2.56 billion. We did back off. Or I should say we did increase a little demand against that larger supply. We did see feed pop up about 100 million bushels. We did increase exports as well. Interesting thing there with exports is we are way behind last year's pace to this point, and we're behind the 5-year average as well. So thoughts moving forward is we should see an tick in some export demand, feed demand with the larger supply available. Taking a look at the soybean side of the balance sheet, trade was expecting a smaller production estimate coming out of there due to maybe a small increase in yield. We did leave it alone, so we didn't see much of a change at all in the overall balance sheet, 49.5 bushels an acre for beans. We did tick that carry-out level down about 5 million bushels, 425 million. Not much of a change there. Again, we were looking for a little bit bigger cut as far as production. So when you take a look at the markets, we didn't see much of a reaction upon the release of the corn, but we did end up making new lows on the week. And what we're needing to take a look at here moving forward probably is going to see how far we're coming along at harvest next week, see if that has any play in the market. We're going to keep an eye on that. We're also going to see what the Commitment to Traders report has to tell us. That'll come out Monday. We are looking at the Managed Monday maybe accumulating a record, and if not close to a record short position in here. And how will they ease out of those shorts? Are we just going to be drawn into more of a sideways type trading action with the supply we have on hand? It's certainly telling us as producers to try and sell that carry, wait for basis opportunities. Taking a look at soybeans, harvest is pretty much wrapped up. We know what the supply issue, so the driving force from this point forward over the next few months, starting next week, as well as keep an eye on South American weather. Too hot, too dry. That